Hello and welcome to Pitt Street Research. My name is Stuart Roberts and I'm one of the co-founders of our firm. And joining me on the afternoon of Wednesday, the 17th of April, 2024, is Mr. Dennison Hambling, who's the Executive Chairman of Intelligent Monitoring Group, ASX IMG. Dennison, good afternoon.
Hey, Stuart, how are you?
Well, if I was a intelligent monitoring shareholder, I'd feel absolutely fantastic right now. Intelligent Monitoring Group was off everyone's radar screen a year ago. And then you announce a magnificent acquisition where you're buying the ADT business, security business in Australia from Johnson Controls. And suddenly you're a leading player in security in Australia. Tell us how you got that company making deal and where you intend to take it.
Thanks, Stuart. I appreciate the compliment. Look, the reality is it's been a lot of work behind the scenes for a number of years now. So predating that announcement was about 2 years of lead-in, where we essentially started with a small unconsolidated security monitoring business out of WA, which had bought about 9 assets around the country that essentially Peter Keenan and I joined the board of. And we worked hard to bring that business together, invest in it. We asked for some capital at that point and built our relationships in the market. And what we saw, and the reason why we persisted through what was a bit of a slog, was the opportunity set was apparent to us then, as it is now, to the idea of creating an industry-leading, essentially professional services security partner in Australia. And that role didn't exist. And the other industries we look at around Australia, services industries, there's typically a leader or two or a brand name or two. Thankfully for us in that journey, at the ADT business became available, again, through a lot of work and partnership and I guess, meeting people in our journey to acquire. And we got a fabulous deal for that, but entailed a lot of work to remedy that gave us the only brand that's really may not be front of mind for people, but it's the only one that's on anybody's mind if they think really about security too deeply in their life. And so it's been the culmination of a couple of years of seasoning, as I put. And one of the ways I explain where we're at today to investors is, we're now a seasoned business. The core team spent a couple of years. We've built our bona fides. We've got to understand the industry. We've brought talented people from the industry into the business, retained good people, got the leading brand, and now we're in a position to look forward and say, what can we do with that? So certainly, yes, very rewarding this year from a shareholder point of view, as we had hoped it would be. But now we're in this more exciting position of having a base of the business, with a brand that is now leading already at a small scale, in our opinion, to really build on and take forward. And we clearly see the opportunity, and I say clearly being I could articulate it to you in confidence of how we could build this through to being $1 billion business. And so we're pretty excited about the opportunity. It's in our hands. We just have to deliver, and that's what we're focused on doing.
Right. So Johnson Controls sold the ADT business for you, Australia and New Zealand, for $45 million. And on any measure, that was inexpensive. But it had to do with the way in which the business had been run, pretty much for the benefit of Johnson Controls' equipment business. They were selling a lot of equipment useful in the security industry, not as a service. You've now taken that business and begun to promote the service more than the equipment that you would sell the customers. Turns out, since you've closed that deal in August, the customers have been very responsive. And not just the existing customers, but new customers you've gone out to.
Yeah, no, look, absolutely. I mean, I think stepping back, security is a service. So if you call a security provider, you're not calling with a equipment vendor in mind. You're calling with a problem in mind. And so, it's a little bit like a financial advisor. You hope that they're in a position to give you independent advice to find the best solution to your financial problem. It's the same with security. So that enables us to now be free to go out and find the best solutions rather than the solutions that, the company has. And I think that really had held JCI and ADT back, probably both of them, for some time globally. And you see globally, JCI has been getting out of ADT around the world, maybe for these reasons. For us, the rationale for JCI, the price, to be perfectly blunt, was an incredibly good price. And I don't think I'll get another deal like that in my career for Monopoly's brands member.
Right.
But the reason, there were a couple of reasons. The single biggest one, though, was that the acquisition itself entailed us coming off JCI's core systems as a business. Now, JCI is Fortune 300 company globally. The actual level of profitability, as good as it is for us, was relatively immaterial to them. But the risks of system failure from going with a bad partner was incredibly high. So they took the view that they were prepared to really gift us a business on the basis that we could show that we could unwind from them successfully, as we have been doing. And I think from a, I don't know, credential point of view, what that's really saying is JCI have looked around the entire industry and said, these are the only guys and team who we think know what they're doing operationally and can actually deliver. And so it was really not just buying a great business, it was also an endorsement from a Fortune 300 company that the team we've built is actually skilled and knows what it's doing. So yes, now we're free. Now we are able to really just try to meet customers, needs, and it's a freeing place to be. And where it's particularly freeing, given the history of the ADT brand, but also product, is in the commercial enterprise space. We have very large commercial enterprises who are looking. Technology's changed a lot in recent years. IP-based, cloud-based. With camera technology evolving quickly, they're all in need of refreshes. They're all looking for integration. They're all looking for common platforms. There is a lot of work. There are not many, if hardly any, national level integrators, as we'd call that part of the business, to do the work. And so we're in a privileged position now, with not many competitors of that scale, to win what is a large book of work. And so demand in that area particular, but generally, is not a problem. Like delivery and execution is really, becoming post ADT the focus of our existence and our success.
All right, so let's go back to August 2023. The acquisition closed. You're then in that risky period where you've got to integrate those customers into your new system. That must have given you and your colleagues a few sleepless nights in the meantime.
Well, look, it hasn't been quite like that. So what we inherited was an existing system which was running on a JCI platform, and so we haven't. This has not been a synergy exercise. So at this stage, we've not actually really integrated the businesses. What we're doing is focusing on improving ADT standalone, right. And that's really been the focus of this first phase. And that is getting off the old JCI systems. We're off HR now. We're coming off the ERP this month. The final IT platforms are the last piece, which allows us to be free to then control our own destiny. And then the second phase of that, which will happen under the hood and probably out of sight really of the market, I guess, at least at the headco level, will be us starting to be able to line up the platform. So the ERPs are all lined up now, will be similar, payroll similar. The final piece will be IT. That will then allow us to really look harder at our operating structure. And I think that will become clearer to people even over the next couple of months as we look to build out our business plan and do a few things as to how it all fits together. So stage one was just a simplification, separation exercise. Sleepless nights, not really. I mean, one of the things we've had to become good at, having bought a business that was poorly integrated on day one, the day I joined the board, was we've had to become very good operationally at merging databases and bringing businesses. It's quite IT intensive challenges. This challenge actually hasn't been that great thus far. So, that integration will happen down the track and in a controlled fashion.
And well, let's talk about the opportunity as well. Beyond you and a few other competitors, it's a very fragmented industry. So there's a chance to grow by acquisition in this market. That's got to be good for the future growth of IMG.
100%. Like, it's an incredibly fragmented market. So the commercial, as I call it, commercial security market. Now, this is not guards. This is technical security provision of the service of security, and not the labour or guarding or any of that. There's a $5 billion market in Australia. And so of that, I don't believe there'd be any player. The largest player in that market may have $400 million of revenue, maybe less than that, and then it would tail down very, very quickly to be regional, state-based, even area-based competitors. So the opportunity is, say, to be a national level integrator, of which I can only really think of maybe 2 or 3 competitors of any scale, is significant. the challenge, the work is there, the challenge is delivering it. So acquisition would be for us very much possible, very much live, but it's got to be around strategy and actually enabling our growth. So I guess one of the features of this management team and this board is we have seen a lot of, we've got a lot of corporate history. We've been investors ourselves. We've seen a lot of what I call indigestion periods of companies going out and doing rapid M&A. And so one of the things I am determined myself not to leave behind is a business that is a failed integration. So we have a lot of opportunity. There's a very big tail of things we can do, but we are very focused on it being strategic. Clearly has to be accretive, and it can be. We have not bought a business in our journey of this current board at above 3.5 times EBITDA in our hands, and I don't foresee that that's really going to change. So, you know, we have the opportunity to scale up quickly. I have a very clear line of sight as to how we can grow this business, should we wish, through M&A, through to being about an $80 million EBITDA business. Likewise, though, I don't need to do M&A to grow. And so it's really, as I say, it's really about taking an overall view to say, right, you know, here's our organic picture. Can we supplement it? Does this make sense? Is this strategic? Does it add value? And being selective about what we do. But we've got a very, you know, we're quite skilled, I'd say, in that regard. And, you know, we'll see what comes our way. But certainly having the ADT brand, the other thing I've noticed is we're now front and centre of conversations in this industry. And so the other thing that's happened is the quality of the opportunities that we're looking at are just greater again. And so, you know, we're really building a very robust, high quality business now, which is exciting to be part of for the whole team.
As I got to know the company, it reminded me a lot of Sonic Healthcare in the late 90s. Similar kind of scalability in that, as you pointed out, you're not the labor-intensive guards and angry dogs on the other side of a barbed wire fence. This is monitoring, so it scales quite well in a fragmented industry. So we saw obviously what happened once Sonic Healthcare had got a head of steam in terms of beginning to scale. How do you feel about that comparison?
Well, look, I like it. I remember meeting Colin Goldschmidt myself back years and years ago at the start of that journey. So
did you buy the stock, Dennison? This is the question.
Yeah, well, then I did. Yeah, like back in the day in my prior life, I was a participant. But so look, I'd be humbled if we look back on the same sort of journey. But you know, we live in the present. I think you're right about the opportunity set and size for sure. And you know, to be perfectly clear, the people involved here are not involved to make the world's best micro cap company. It's to actually build a company of scale as our modus operandi. Can we do it? Well, again, delivery is key. Is the opportunity set there? Yeah, absolutely. I think it's quite a, you know, it's an interesting industry. I step back though. The key thing to really understand is this point about the customer and what the customer needs. Like it's a little like buying insurance, but it's not quite the same. Like you are looking for a solution, and if you find a provider that provides it, you are in a unique and long-term relationship. And so in one sense, I think it's better than financial planning, financial advice, the financial world, because as long as you deliver and as long as you don't become, you know, either fail by offering old technology, not keeping up, which we certainly will not do with our focus. And as long as you deliver to expectations, and look, we have hundreds of thousands of customers, so we're going to have some issues. We'll always on a pool of that size, but generally we do a very, very good job. Like we're 99.6% type of performers. Then that relationship is really enduring. And so whether that comes through a monthly monitoring fee or through a regular service fee or an upgrade, you know, work or whatever, and that can happen from both the home right through to commercial. And at the moment, commercial is our single biggest easy market to attack quickly. It's all the same. And so, you know, it's a really stable business. And, you know, and it's the point I make to people. I mean, we gave guidance and, you know, we're really comfortable with that, but it's solid. Like it's not, oh, well, you know, does it vary much each month? And are you going to beat by 50% or are you going to fail by 20% or 30% or whatever? It's much, much more stable than that. Like it's a great business to you know, be caretaking, as I'd call my role, because, you know, you get the monthly numbers in and go, wow, that's pretty cool, plus or minus a little bit. and that's a great foundation. So yeah, I think you're right. Actually, really, I hadn't thought of the analogies to it, but I like it. I think I can see the commonality.
Now, many investors won't know you. You didn't actually grow up in the security business. You're from an investment professional by trade, originally from New Zealand. I think you spent some time with Goldman Sachs, JB Weir on this side of the ditch and in London. Tell us about your career and how you ended up as the executive chairman at IMG.
Yeah, well, like most things in life, luck and happenstance play a role. But look, I effectively, my story as I tell it is I left school early, went to university early, and I got investing professionally early. I was lucky to join a team in New Zealand, which got given was part of a team as an analyst initially, that got given an Australian mandate almost straight away. So right from the start of my career, I was running Australasian equities, as I'd call it. Half the mandate was Australia straight away. That then took me on a journey as a professional investor that, look, I'm still largely on. I still do actually, watch markets and look after a little bit of money. I'm involved on the board of the Hancock and Gore Conviction Fund, HCF, just as a non-executive director, I should say. But effectively 2019, I came out of the business that I'd been part of, which is called First Samuel, and have taken a different route, which is taking it some of the look. I won't say it was by design; it was by necessity. Once we joined the board of Threat Protect, it was clear that it needed more work than we had anticipated, and I was up for the challenge of putting in practice a lot of things I've seen, and particularly in turnarounds, but also growing businesses. And so, the nature of the investing I'd done professionally was very hands-on. So we were quite active investors. We were engaged with companies. I've been involved in changing a lot of boards, management teams for improvement. Active is not activist, it's constructive. So my approach has always been just genuinely in business to try to be collaborative and constructive.
Yeah, a private equity type approach, I'd call that.
Yeah, exactly. And just work openly with all, stakeholders and interested parties. And so that has put me in this unique position, which I didn't expect to be in. I never sort of had an aspiration to run a publicly listed business or probably even full steam a business, but I've really enjoyed it. And what I've really enjoyed is the cultural change and putting in place what I hope history will determine is a high-performing culture and a high-performing team of decent people who, have got the customer and stakeholders at their heart. And, that's been really rewarding. Been great to see the market, start to come to that. But it's even better to see the people and the customers respond to that. So yeah, it's been an interesting ride, and we'll keep going. As I always say, my job is a day-to-day mandate, so I live at the behest of the board. Should I not be the right person for this role, I'll happily hand it over. That being said, I really enjoy it, and I'm here for term until such time as I'm not the right person. So we're on a very clear mission.
It's April 2024 now. So as we move into 2025, what's the big opportunity for you there?
Yeah, look, the opportunity. So now we've got the pool together, we've got the structure together. And again, I'll make the comment that I think that structure gets cleaner and even clearer to people as we move forward. The Intelligent Monitoring Group, why we've got that title. The opportunity is we've got this existing portfolio. We've gone through the big acquisition. We've done the stabilisation of ADT. We've worked out, what our strengths are, what our levers are. I make the comment there were two big lessons that I've taken, at the macro level about essentially the big drivers for this business, what we've got. One was a realisation that I was being approached prior to ADT with national level contracts looking for someone to do work because they couldn't find anybody. And that's really that commercial $5 billion market. There's a really significant demand for a credentialed quality service provider. That's a big lever we're going after, and that's our immediate strong growth in the next year or two. I make the comment, we bought ADT and it was doing $2 million of revenue a year in that space. It had done at its last high $130 million of revenue. Now, I won't bore you with the history today, but JCI actually pulled out of that business, which is why it got down to 2 million. It wasn't because of a failure of the business, it was a strategic decision made outside of Australia. We're simply bringing that business back. At $130 million, that would double the size of our current group today. So just doing that in Australia around commercial is a key, lever and opportunity. The second one was I looked at the residential market and went, this is a very expensive security product. not like elsewhere in the world, and we've got very low penetration in Australia. And by the way, I don't think it's because the demand's not there. Crime statistics in Australia are not that different to the rest of the world,
Right.
except for gun violence, right? So people often go, yeah, but America, but yeah, but that's okay. We don't have the gun violence, but as we sadly have seen in recent times, like, we've still got a society that's prone to crime. So if we unlock that, as has happened elsewhere in the world, then we have a significant, we have the only leading market position with the only brand that's really known, and we could actually turn that into a multi-$100 million, recurring revenue business. So those two big levers together, we now get the opportunity, as we're looking into 25 and beyond, to start to grow into. So we're looking at an organic growth year into 25. We will work on some guidance as we get to the end of 24 to indicate. As I say, we're a stable business. We're not a mining company that's seen the price of its product double over the course, but we're a very stable business focused on returns that can drive returns that should lead to really, really good results and sort of double-digit returns for people.
Well, Dennison Hambling, well done for you and the team in terms of what you've achieved so far, and good luck as we move into that all-important FY25.
Thank you, Stuart. Appreciate your help.